I'm going to use this section to talk about something. It's a continuation of the previous session because so I'm going to add it together, but I'm going to separate this particular session because I want to talk about something today. Are you getting it? The reason. So this is a topic on its own, and the topic is clearly tagged the reason why people don't trade flag and the reason why flags fail. Getting there's psychology behind this, and a lot of people don't talk about it. Why? Because a lot of people don't know the reason why flag fails. So I'm going to tag you the reason why flags, either bullish or bearish, fails. Why flag fails. I guess. And so we're going to take this topic today and just take it as a heading. So I'm going to give you the reasons why most time flag fails and why it failed on one of our, what's it called? The only swing trade we have failed is because I actually did a video, what is a phone video I did, and I gave the reasons why flag failed. Are you guessing? So it's not happened, not like I'm saying that it's gonna fail in whatever we have been talking about since on Euro USD, GP USD. We don't know that yet, but if you really are flowing with the market, definitely you are supposed to know if a flag should fail or not. So first of all, the reason why flag is being created is because the market, let me use the DXY for example, the market has actually, changed to the downside. So the market has been expanding and it got into a consolidation phase where buyers and sellers were struggling. Are you getting it? The market has expanded up to this extent, got exhausted. Buyers were trying to take it up. They couldn't, they failed. They came and formed a double bottom. They came again, they couldn't break the last high. Are you getting it? They came again and they broke, but this was actually a fake out. So every details count. In these areas, how will you know that it's a fake out? Because if you are really a trader, you would have entered a trade from here. Are you getting it? Put your stop loss here if you really want to sell down, not entering a trade from here. You're supposed to come and wait for a retest, and most of the time retest might not come, it might just go, but let it go if you're a conservative trader, except you are an aggressive trader. An aggressive trader that you have entered this sell from here right now thinking that this will hold, you know what you would have lost here. Are you getting it? So it's good to, at Vision X we are conservative traders because we flow the market. Even in these areas, I did a video that every detail counts, because if you drop to probably your 15 minutes time frame, you will see that even on that retest, you will find out that a lot of things happen on that fake out phase. You were supposed to be waiting for a shift to the downside, but instead, it gave us an equal high. Are you getting it? And even further, it gave us an equal high and even further came to break our important look at structure. So I gave a video and said that we are just going to reverse to this demand zone. If we can hold it, then we can hold that demand zone. It will take us to this next area of value on the 4-hourly time frame, which happened. Watch my April 8th video. I gave this analysis and you can see that we extended over 800 from on USD, over 150 pips right now to the upside, because this was actually a fake out. So when you get this kind of areas, you are supposed to wait for a shift back to the downside, not our broke structure changing character to the upside. So why were you entering a buy to the downside, and why were you entering from these sort of areas? Are you getting it? Why were you entering from those sort of areas? I'm having network issues right now. What is important that you flow with the market. So if I should take it on from Euro USD, are you getting it? If this was actually a break to the upside, if that was actually a break to the actual reason why I didn't trade this, are you getting it? Because this was an equal high. I didn't trade this particular float drop to the downside because here we had an equal high. Are you getting it? So I consider that as equal high and not a break of structure. Are you getting it? So it was an equal high to me. Here's my equal high. So that was an equal high to me. So I didn't trade it to the downside. I waited for this particular break. Are you getting it? I waited for that particular break. Then after breaking, I took a sell. You can see that we shifted on 15 minutes time frame, and I took a sell just to test to the downside to touch my trend line. And on the 4 hourly chart, I got a bullish sign again. And what's a bullish sign? I got a hammer. I got a hammer. Look at on that particular place. That's why I took a buy trade from here again to these areas, and I waited for a break. Now, how do you know we break? It's still here also on the 15 minutes time frame. You did not see a shift. I guess in a way, just expanding, and it was a news day, so I didn't buy because I didn't want to come back down here with the news with a week before going back. But overall, it is good to wait. And we're still talking about the bullish flag. This was an extension from the downside, forming a bullish flag because this market got a triple bottom here. But after breaking the structure, we entered into a bullish continuation phase, which is called an ascending triangle, and overall is a bullish flag. This was our first fake out, but we're broken above it right now. So if we even start buying from here normally, it's good to go. Are you getting? So look at something now. This market, a lot of people like, okay, definitely if this is a fake out, we would definitely come and retest here. No, we have shifted to the upside above that flag already. So if there's anything that is going to even happen as a retracement, definitely we are supposed to. Are you getting it? A lot of people will say, okay, I'm waiting for a retracement back to the downside. We might not get a retracement. We might just get a retracement to this particular place. Are you getting it? That's that good entry again, or week down. Are you getting it? And continue this market to the upside. Now, the reason why a lot of people don't trade flag is that if you go to your daily time frame or your weekly time frame, you can see that it's either an important area of value or your highest resistance level. Are you getting it? That on the 4 hourly chart or the 1 hourly chart, it might fail. Like, let me use DXY. On DXY right now, it's still loading, so I'll just refresh. Like on gold, we have broken above already. Are you getting it? And this is a bullish flag, and which you can see that we broke and we formed a bullish consolidation as an ascending triangle and broke to the upside. We tested on gold perfectly well, and we started buying from here. It gave us breakfast in bed 2 times. Now we just need to break above here to confirm that this market is really going to the upside, not forming a double top. So I need a proper break with a 4 hourly or a daily break to the upside. I want to see a candle close above here. Are you getting? So that it will not fake me out, forming a double top, then coming to break back into my ascending triangle and change character, breaking the structure and change character with this. It might not even break, it might touch here, but sellers may take control by finding resistance here, then break it down again. Once it breaks down, you know that this market has continued a downtrend movement to the downside. Are you getting it? And continue like this. So this is the reason why a lot of people don't trade. Is the reason why a lot of people don't trade. What's it called? The reason why a lot of people don't trade bullish flag. So this is for good that I just did just now. Are you getting? So and the only way to continue this trend, the only way to confirm that the bullish flag is going to hold, break above this with a proper candle. Are you getting it? A proper daily candle. If it breaks above it, then if it's coming back to retest a Fibonacci level or retest this particular area of value, I know that this market is continuing. So I'm not buying from here. I'll wait for a proper break. Are you getting it? Shift to the upside again, then retest a fib level or the area of value, then start buying from this kind of areas, putting my stop loss below here, and that can continue this market to the upside. So those are the reasons why a lot of people don't trade flags, because it's actually an extension. It's actually an extension of how the entire market is going. So let me leave that and go to what's it called? Let me leave that and go to this is gold. So I'll leave that and go to probably Euro. Have I done Euro USD? Let me check Euro USD. Okay, I've given Euro USD. Now on GBP USD, let me go to the daily time frame and show you something. You can see that we were previously in this consolidation zone. Are you getting it? So we are consolidating between here and here. We are still bullish according to flow of the market. Are you getting it? So right now you are seeing that Euro USD has even left this consolidation. Are you getting it? Euro USD has left this consolidation. We've broken above, we tested, and we are breaking above here again. Once we break above here right now, it's telling you that Euro USD is on continuous market to the upside. Are you getting this? Continuing the market to the upside. So I trade areas of value, not taking trades from inside. Yes, I know that overall, if you go to your lower time frame, yes, we actually traded this inside this consolidation because this was a fake out to the downside, breaking the structure to the downside. And I've seen those kind of things happening before. Faking out, then coming back to break this our last lower high. They will enter a trade from here on, I think on March 15th, 16th again. I guess after using our Fibonacci levels to see where we're coming to after changing character to the upside in this area. They will enter from 2050, took it to 1.2400, 350 pips, and we are waiting again. And since then, have we been bearish? No, because we are actually doing something called a bullish flag here, and the bullish flag is actually playing out already. Are you getting it? If you don't call it a bullish flag, anything you call it, whatever I know is that this market did not break any low. So the market was actually, you know, did a higher high, higher low, higher high, higher low, higher high again, higher low. So it's continuing, it's trending to the upside. So why do you think we might sell to the downside? Except if we close a double top here, then come and break this lower time frame, breaking back into our what's it called? A consolidation phase on the daily, they're testing here, they will start coming back. So it's important that you know your structure, market structures. Are you getting your higher high, higher lows, higher lows, or your lower lows, your lower high, lower lows, lower high? Take your trades from those areas. Those are what I call area of value because they meet those higher high, higher lows meet at some particular points. And once you see those two touches of resistance and support, those are good areas that the market might actually sell from. Are you getting it? The market might actually sell from, or the market might actually buy from. Are you getting it? So once you are taking those quality trades and you have a lot of confidences telling you the same thing, and you have the structures and you have the advanced structures in your head already, 80% of the time you make your 1000 pips as a swing trader or your 100 pips as a day trader, and you lose just probably 20 pips or 50 pips. So if you make what's it called, 1000 pips 8 times, which is 8000 pips, and you lose just 200 pips or 400 pips in 2 trades out of 10 trades, you lose 200 pips stop loss, 200 pips stop loss again, minus your 8,000, you see you have 7,400 pips to go. That's what I call consistency. That's why I'm a swing trader and I trade structures that actually does what. So I just explained GU for you right now. Right now, this market might still fail if this turns to a double top. So I need a proper break to the upside. So I usually wait. I need a proper break to the upside. Are you getting it? Doing probably a fib trend extension to tell me that okay, this market actually trended well. Are you getting it? Break and come to 0.786 area with a daily candle close or a fourly candle close, so that whenever you are retracing from me, are you getting retracing and touching here to go, or you are retracing properly to 0.786? Are you getting it? So if you are retracing for me properly, I know that I have other confluences already that is telling me that this market might just go to 0.786, come back to 0.5, then I start buying again, putting my stop loss under here, or it might come to 0.618, then I start buying again to go to the upside, knowing that on the daily, I have what's it called? I have a structure on the daily again, and this market moves from face to face. So if I should take this face, I can just put it here and take profit at 2900 area from 400 area. That's under 500 pips into the future. So these are ways you know how bullish flag works, because now let me go to Bitcoin and show you. Now it's clearer on Bitcoin. We have an important area right now. You can see that this was a previous, support that broke down, and for over 1 year we're in these areas. Are you getting it? Trying to switch this market back to the upside. Okay, on the lower time frame, as you can see on this weekly time frame, you can see that we've done a head and shoulders pattern and switched to the upside again, breaking above. So is this really going to break? You don't know yet. You have to drop to your lower time frame to trend that. And when I drop to my forward time frame, you can see something again. So this is a difference between, you can see something happening here again. Are you getting it? So the difference between here and here right now is a bullish flag. And if the bullish flag does not fail, this market has actually, entered a bull run again. And how do you know? Your folly time frame, as you can see on my folly time frame, this was the head and shoulders pattern. If I probably switch to maybe 6 hours to, compress it further, I get me. You can see that. Okay, my chart is back. So flowing with the market, you can see that I'm using Bitcoin. Let it load, let it load. Okay, it has loaded. This is my 6 hour chart. As you can see, this market has been trending to the upside. And here now we've got an ascending triangle number one confluence. I've got a bullish flag. And since we got a bullish flag, are you getting it? First of all, we have what's it called? We first have a head and shoulders pattern that if it breaks to the upside, will take us to 38,000. Now we're having another bullish flag confirmation again. Are you getting it? Because if we take our head and shoulders pattern from here to here, there is a target that it goes to. Are you getting it? If this is the first one, then that target takes us to 34,000. Then if we use our bullish flag again and clone this, I guess in it, clone this. So a lot of confluences and put here to take us to $37,000. Sorry, take our bullish flag to take us to $37,000. So there are a lot of things you use in driving your market, and these are one of those things. And the only way this bullish flag can phase, you know, remember, remember, this is an important area of value on the weekly. Are you getting? So the battle is between here and now. Once this bullish flag fails and come back to retest, yes, we still have our area of value of $25,000 area, which is the, what's it called? The head and shoulders pattern retest, break and retest. And if it breaks and retest, we still have, we are still on our bullish market, which will retest at 0.5. Are you getting? So that's on that one. But the bullish flag itself, if it does break and retest, are you getting it? Not our head and shoulder, inverse head and shoulders pattern. If it does break and retest this 28,000, this bullish flag, there is a ascent triangle area, does not break this one, does not break our trend line, our liquidity trend line, and goes and break above again, then coming back to find an entry here or around this area, putting your stop loss below here, can continue this market. So this is the reason why most people don't trade bullish market, and they don't trade it because they don't understand it. But it's risky. And remember, at Vision X, we wait for market structures to form before we take a trade. So somebody was trying to short this from here that were coming down. I told the person that overall we have a bullish continuation pattern. So why are you shorting? And the person got liquidated around here because he was even using higher leverage on Binance, which was about 20x or so, something like that. So you flow with the market not because you have an important area of value here on the weekly time frame. You are scared. The 4-hourly time frame or the lower time frame right now is telling you that we are here. So if we're not breaking down here, are you getting it? And continue this market and break up here, then we'll retrace and find an entry and continue. Or if the bullish flag fails, our inverse head and shoulders pattern that is on the higher time frame can save us on this kind of areas of value, trying to form a head and shoulders pattern in these areas. Are you getting it? Trying to form a head and shoulders pattern, left shoulder, right shoulder, that if it breaks to the downside, we've started a massive bearish market on, what's it called again? Because this is an head and shoulders pattern that if it breaks to the downside, we'll continue this market to the downside. Or if it breaks to the upside, or they might just use it like, as something to deceive, buyers, manipulate this market, come down, manipulate this market. When we get here and we shift on, you are finding a shift to the upside again, and we're testing, my continuous market give us an entry from $25,000 to our take profit target on our daily, our inverse head and shoulders pattern to $34,000. So these are the two scenarios you have here. If this one holds, take us to 37,000. If it does not hold, our head and shoulders pattern will take us to 34,000, which has actually, might shifted this market to the upside. And, so we just learn to flow with the market. Are you getting it? Come back to our area of value, give us an entry again to start going to the upside. So if you're a swing trader or a position trader, these are the kind of areas you want to be buying from, not these internal areas you are seeing here, because this might actually turn to a consolidation or a bullet before it can break to the upside. So you should be you should be willing to wait, not just want to trade. You should be willing to wait and know all your sharp patterns and continuation patterns before you take your trade. So I'll end this video here so that it will not be too long, because I've combined entirely what I'm following with the market in DXY. I'm also following with the market on gold. Are you getting it? I've shown you on gold. I'm also following with the market on Euro USD. We are here right now, so we are still bullish because we're breaking structure, we're trending to the upside. As you can see, I've shown you my GP USD also. The reason why I'm waiting is because I need this particular place to break, go to the upside. So even though I start taking entries and put my stop loss about 200 pips, are you getting it? I know I am still in the market flowing to the upside, that this places might actually hold. On Bitcoin also, I've shown you the reason why Bitcoin can get to $34,000, 37,000, 48,000, or a new all-time high again. So it's important that you learn to flow the market and don't just dwell on, they say that, oh, your higher time frame areas of value holds more than. Yes, it does, but learn to take every details along with you by going to a lower time frame to trend it out. Are you getting it? So that's what we have. And overall, you go to your higher time frame also to find out what is happening. Because if you're on the lower time frame, you on NZD USD, you would have been selling at these particular areas. If it can load, you would have been selling at those particular areas, not knowing that we have not actually broken structure to the downside. But on the lower time frame, it's giving you break of structure, break of structure. Are you getting it? It broke and broke this structure. And all your mind is that, oh, we have broken structure. But go to your higher time frame, like your 40 time frame, you see that this market is actually not the way it seems, because this market actually, as you can see, has been trending to the downside. Well, definitely it came and broke this trend line. So we are here right now. Is it gonna prevail? We don't know yet, but overall, okay, we brought structure to the upside. So this was our last break of structure. So this was our last lower high. I told you every detail is important, because whether I like it or not, I'll consider that as a break. I get it, because this was our last structure. So did we break it? Yes or no? We did. So it's important that sometimes just zoom out very well to know if your market actually, played out or broke. So if I zoom out right now and make sure that all these coordinates are the same. This was a break. So if that was a break, this was our last lower high. Are you getting it? This was our last lower high. So if that was our last lower high on NZD USD, definitely this is a change of character to the downside, because it even came with a massive break. I guess this was a massive candle. So are we testing to start going down? That's another question you ask yourself again. So in this kind of areas that I've seen now, because every detail is very, very important. Every detail is very, very important. Every detail change your character to the downside. So every detail is very important. So if those details are very important, previously right now, see, I was even saying that this was my last low, not knowing that this was my last low, because we actually broke this up. I'll take this off right now and just try to flow the market and try to see whatever this market is doing right now by taking my lowest high to my lowest low and saying that if we actually hold this and 0.382 actually holds and starts flushing to the downside, definitely it will take us to 0.786. And if we start selling from us, we start finding a shift to the downside from here, this market might actually take us from 6260 to 6100. So how many pips is that you measure with your what's it called, price range? So from here to here, you know how many pips you can get. This is under 158 pips to the downside again. So just learn to follow the market. This video is very long, but it's anybody that loves whatever we're doing here will not say that that loves or know what that knows the value of whatever is happening here. She knows. So on this kind of chart right now, I go to my lower time frame, find shifts on those kind of areas. So I was a shift, same thing. This market was trying to the upside. So once I start finding break of structure and we are not able to break, I don't even take on the first one. I come for the second one, then find shift again. So I start taking from here, putting my stop loss above here, you know, to start breaking this market to the downside. So that's how I trade. I don't just enter trades without confirmation. I get it. So a lot of confirmations will tell me that okay, we're going to the downside on my lower time frame. I just use my lower time frames for entry. I don't trade them. I'm not a scalper, I'm not a day trader, I'm a swing trader. I guess because every detail counts in trading. Every detail counts in trading. So it's very important. And because we change character to the downside does not mean that this trend line must hold. Does not mean that I must hold. So you go to your lower time frame, try to find a switch to the downside and not just take trades blindly, because this market might actually just on NZD go to the upside, continue its trend. So your lower time frame shifts will tell you whatever is happening. So those are the high probability setups that we're talking about in trading, and not just because you are not making money or you know any other thing, you just enter into this market. USD card with daily time frame, you see whatever is happening here. So this is a consolidation phase happening and it's coming down. So if you are not on your higher time frame, how will you know what is happening on your lower time frame? Because if you had been just been biased, you would have probably been buying from this sort of areas right now, saying that oh, this was an area of value that is supposed to hold because this market actually changed character to the upside and we tested these areas. But did they hold? You know, a lot of people have strategies, but I just have that flow with the market strategy, and it has been helping me for a long time right now. As you can see, I was playing with this market because this market was on a downtrend. I guess it, well, entered the bearish consolidation phase, came to this area again. I guess this last our last lower, I couldn't break it, came back here, retested this area of value again, I guess, and broke down from this last change character, retested and is flushing down. So just learn to flow the market. That's why most of the time your what's it called will not fail. So use your lower time frame to flow in the market and map out your very important areas of value, because if this market actually breaks to the upside, that means this market will continue to the next major important area of value. So I'll end this video here, then put them all together and upload for everyone, anyone that seems it's important to for him or her. And look at Ethereum. Look at Ethereum. Ethereum is right now invalidating this structure again. Ethereum is invalidating and trying to break to the upside. So if Ethereum breaks above $2,000 area, know that a bull run has started. This is a weekly, as you can see, this is a weekly time frame, and we are here. But I can't know anything except I go to the 4 time frame to find out whatever is happening on Ethereum. And same thing I told you on Bitcoin, Ethereum is even faster than Bitcoin. Look at Ethereum right now. See what Ethereum is doing. See what Ethereum is doing. Ethereum has broken. Same thing I've been explaining. I needed a break and it broke. Was that a retest? Was that a major break coming? Okay, this was equal high. So I consider this as an equal high. Where's my equal high? Deleted. I don't. So I consider that as an equal high. So I consider that as an equal high. So right now we've broken to the upside. So wait for what broke the structure. The networks are very crazy right now. So what broke that structure is this guy. So I'm just gonna wait for a retest of the demand zone that broke the structure again, I guess, in it, and take a buy from here and continue this market, because if it breaks, this is our proper entry. This is one of the most proper entry to the upside you are seeing here right now. So entering from here, I guess, entering from these demand zones from here, putting my stop loss here can actually give me, putting my stop loss here and going to my daily time frame to trend this out, or my weekly safe, daily, sorry, because overall this was an ascending channel on what's it called, Euro USD, that if you break to the upside and continue this market from where I want to enter, look at the reward. This is a 19.46 risk to reward ratio. So this is how to trade. So Ethereum is giving us something precise, but don't be carried away yet. Look at, we still, our areas of value is still at the upside. So this is an, so if I adjust this very well, or if I take this out and use this as my resistance, are you getting it? I need a break above this particular resistance. Then when you're coming back to retest my lower time, my demand zones I have here on my lower time frame, probably my 4-hourly chart, I will know that this market has actually gone to the upside. But overall, you must invalidate my bullish flag for me to be, I guess, remember, I'll still have a bullish flag here happening, we'll still have a flag here, I'll still have a trend line here. So you must invalidate these two for me. It's either you invalidate this one or invalidate my, my liquidity line. Then I know that, okay, you are changing character to the downside with testing and breaking down again. So if I continue like this, I'll do more assets and we'll continue talking and talking and talking without leaving here today. Same thing on, what's it called? Same thing on NASDAQ. So if I go to a lower, higher time frame on NASDAQ, you see how I have been trending this market from the downside. On NASDAQ was even textbook that we got from 11,800 to 30,100, double bottom, a double, triple bottom. I get in it. And what I tell you about triple bottom, it takes us back to our highest highs, our last lower high. I get in it. So definitely that, probably that's 13,700 we're going to. So as you can see, we broke, we tested 0.5. Now we are trying to, continue trending to the upside. So it's just flow the market, flow the market, flow the market using your bullish continuation patterns. Are you getting it? Using your bullish continuation patterns, because this was a resistance. Are you getting it? Now broke, turn, support. So if this is support, this market will definitely continue to the upside. That's NASDAQ, S&P 500, the same thing. US 30, the same thing. The USD chef, and this is even USD chef on the weekly. Look at USD chef, the weekly. Flow with the market. If you're flowing with the market, definitely, and using your areas of value, you would have known that USD chef was resistance, support that broke, turn resistance again, resistance that broke again, found support, found double top. That's why it's almost break above with daily or weekly candles. We didn't break above. Then it gave us a double top that broke down, changed character to the downside. We tested this area of value, and now we're going down. Are you getting it? It's just as simple as that. Seriously, it's just as simple as that. And this kind of retracement that happens, I get in 0.382 or 0.30 gives us 0.786 retracement to the downside level. So you can see what market structures and price action is doing here, telling us that USD chef might come to 0.786 or 618 or 0.786, and definitely 0.786 from here, 9419 to 8785. That's about another 900, 800 to 900 pips to the downside if we measure very well. Are you getting it? If we measure that very well, let me bring it back. Bring our price range from there, from here to here. So overall, use your weekly time frame for your buyers and your areas of value. Are you getting it? Use your weekly time frame for your buyers and your areas of value, and just go to your lower time frames to trend it out. This 860 pips on USD chef that a lot of people did not see. So why are you looking for 20 pips? 20 pips, 860 pips on one lot is $8,600. On 10 lots is $6,000. On 0.1 lot on your $1,000 account is $860. So even though it takes how many weeks now, since March 6th till even 2 months, you know that you are still in the market. How? Because you have your areas of value, are you getting it? And your lower time frame also, your 4-hourly time frame has been trending it for you, seriously, because this was okay. This was look at this market was flowing to the downside during a descending triangle. Got here and started flowing, flushing down again because sellers were, buyers were trying to buy, they couldn't, they failed again, they couldn't, they failed again, which broke. Now look, was there a proper break? Yes, this was a proper break of structure. So you're coming to wait for a retest, which gave you a shooting star on the 4-hourly. And since then, we've been trying to the downside. So a lot of people wait for this to also break again, then before they enter, and they broke with this. So putting their stop loss, even though it's about like 200 pips, confirmation. But this is confirmation. You start going down. So this market is still a downtrend. So even though it comes back and find supplies again from these areas, will continue. So you don't even sell from here now. You wait for proper area of value, to start selling again. This market to come back to start selling again. So I don't trend more than 4-hourly time frame. Are you getting it? I use my lower time frame to trend my 15 minutes now. I use it to trend this market coming back to the upside. Are you getting it? So there are a lot of things, a lot. Use your RSI, look for divergence that might take this market. So even you are looking for 100 pips from 900 right now to 9,000, that's under 100 pips to the upside again. So just try to flow with the market. So definitely this market might just flow back to these areas of value, taking all these ones at this liquidity, because if you use your lower time frames and you are trying to sell from here, it might fail you because you are using your lower time frames. Yes, you are to trend from your 4-hourly time frame. So let me end this here, guys. I've talked too much today, but I've covered a lot for you guys. A lot. Okay, so let's end this here today. Then, next week we'll look at whatever is happening on the market. Then we'll continue doing what? Playing with the market. So this is a break of structure already. We're waiting for a retracement that will continue flowing to the downside. You get me? So take care and bye for now. Bye.